Hey guys, and welcome back to Smart Money Minds. Now, in the last couple of weeks, we've had a pretty choppy market in the S&P 500. We've had in November, we've had a bit of a drop here, and then we came back up. We kind of had a double top in mid-December, and then another drop with pretty significant bear volume. And then we had the Santa Claus rally, which was the days just before Christmas, kind of trading sideways for a few days. And then in the new year, we had a drop back down here. Now, the NASDAQ is even more choppy. Now, you see these support zones and resistance zones that I'm drawn out, but it's just kind of tightening up here from what I'm seeing. This upper trend line, this lower trend line here, it's kind of tightening up within this range here. So with this sort of choppy action, what can a trader do? I could be winning one day and then losing the next and then winning the next day after, and it's just kind of, a big chop zone where I just break even or I take losses, and it's just not a good trading environment. So as a trader, what should we do during this period of time? There's 4 things that I do as a trader when this sort of choppy times happen. So I would be all in during times like this where it continues to drive up. We had a steady, month-long period of time where it's continuously bullish. And this period of time, these are the things that I would do as a trader. So now, the first thing I would do is to slow down your trading. So that means picking stocks that are still within trend lines. For example, I'm looking at Microsoft. Now, we had a choppy market, but Microsoft has been giving me steady trend lines. So now we got this 349 here. We've got push down, push back up, back down, back up, back down. Now, what I'm anticipating is another move back up to somewhere over here. So if I can see that this bottom here, we got double doji, there's a good risk to reward play here, I could enter for a quick stop, and I would expect that this stock would go up, and now we can have a maybe 1% loss. Let's say if we drop down here. So to have this play reject and to have it break down. Now, let's say we drop down 2% down here, and I set my stop there, but for this, there's a 7% play, so this is a good risk to reward play, anticipating that this will go back up. Another play here would be something like DKNG. So we had a steady downtrend, but we have very clear upper and lower trend lines on this falling wedge here. So if it comes down here, and which is exactly what happened, it came down here, it broke down the support, but it started to buy back up. So this is a very clear pattern that we can play and anticipate, even given that the market is choppy and we are playing within these trend lines. And we also have to look at what stocks are holding up their uptrend. So we want to buy stocks that are still in longer time frame higher lows. So something that's a weekly or monthly higher low. What stocks are in equilibrium or hitting a lower trend line? So let's look at something like NVDA here, where on the weekly time frame, it's still in a very healthy uptrend on this weekly time frame. So this is a stock that I want to keep an eye on. And you see this lower trend line has formed all the way down here. So now it's coming back down, and there's a potential that it could hit back down, maybe 263 zone, and we have a lower high back up to here. So we can drop down here and then we push back up over. So these are the things I would anticipate and look for in stocks that still give good patterns. Now the next thing I would do, the second thing, is I would look for hype stocks. So stocks that don't really care what the overall market is doing. Now on Friday we had Disca, which is Discovery, shoot up 16% on this one move here. And this is due to news because Discovery is the Discovery Channel is merging with possibly Warner Media, and therefore it's going to build a new global media powerhouse that can challenge Netflix or Walt Disney. Now, the market that day on Friday wasn't very strong, but you see here that because of the news, we had massive volume pushing it up. Now, it pushed over resistance around this $29-$30 zone, and it's continuing to keep going. So now it's sitting up here. And this is something that is a very typical play too. Now, in shorter time frames, we get a 5-minute bull flag right over here, and it pushes up 10% on this move right here. So these are the plays I would also be looking for. Any sort of hype plays, anything that is just doesn't care what the market is doing and is doing its own thing. Now, the third thing that I'm looking for is I wouldn't enter unless there's a clear pattern and very good R&R, so risk to reward. And that goes for trading at all times. And if you're not trading a pattern, then you really don't have a good edge for yourself. And at that point, you're just gambling. And now, because of the market choppiness, we need to be very clear of our risk to reward, because we have to be more prepared more than anything to lose, because the market can stop you out, because it's just kind of all over the place right now. So for example, let's look at something like ZM here, zoomed communications. It goes up, goes back down to the support zone. Now it breaks over, and now you think that there's an uptrend, but now it fades, and then now it continues to fade a little bit more. So with this sort of chop, it's very hard to determine any sort of pattern here, and there's no real good risk to reward unless this support zone around 175. And last but not least, the fourth thing I do is I generally play smaller positions. There's no need to add until there's a confirmation on volume or on certain indicators that tells you that, okay, this is moving over a 8 EMA. Now this is starting to become bullish. There's no point to keep adding on losers, because as you see on a lot of these stocks here, like let's say Netflix, let's say I add on a loser here, and I go, okay, it broke down support. Now I'm thinking it's going to bounce because it's getting oversold, but it keeps going down and further down, and you keep adding and adding until you have no more money. Then that's where you're going to suffer the biggest loss in your account, because you're adding to a losing position. So why not wait? You can enter your first position very small, and you can have a stop out. You keep your losses small. It's okay not to win so big in this choppy market, but you don't want to give back everything that you gained from your previous big winners. You need to protect your gains during this sort of market environment. So those are the 4 things that I personally do myself when the market is choppy. There's no clear directions. I always slow down my trades. I look for hype stocks more than the regular stocks that I'm generally playing. I don't enter unless there's a clear pattern and good R&R, because that's what I have to do as a good trader, regardless whether the market's choppy or not. And just play a smaller position, always protect your gains, and never overexpose yourself and suffer a big loss. Now, in the comments below, let me know if you have your own strategy for playing in this choppy market. And if you enjoy this video, hit that like button, subscribe to my channel, and then we'll see you guys next time.